Hello and welcome to Market Matters presented by Miax. I'm Joe Teague. With me is Brian Stutland. We are two former VIX market makers who every week talk about all the news that's moving, volatility, and some key news in the market. Brian, happy Monday.
Yeah, it's going to be a great show. We got some big things going on. Joe, what do you got for us?
Yeah, so we had some key earnings kicking off. The banks are getting it started, and JP Morgan having a great start. And Jamie Dimon had some very interesting comments for us.
Yeah, he certainly did. It was basically, he came out and said AI, which we've been calling all along, right? We've been on top of this trade, Joe, that AI is almost like the invention of the steam engine, or it's a new technology that will tend to change the world and how we communicate, how we do business, efficiency, and all that. So certainly that should be interesting. And then, to couple that, you take a look at the grant that we heard is being given out to Taiwan Semiconductor from the U.S. government to manufacture here in the United States. The boom is just getting started here. You look at this chart. Basically, we're gonna review this. This is really our stock of the week, Taiwan Semiconductor. That is, look at these three charts here. Basically, Nvidia is on the top end of that, but really, Nvidia has two other components. It's ASML, which makes the machinery to make the chips. Taiwan Semiconductor, which I look at as basically logistics, manufacturing, and put it out. And then Nvidia, obviously, is the brains behind it all and what's backing those chips, Joe. So this is going to be a great show. We're going to talk about more of this, how we're going to trade this, how we're playing this sort of trade of these three guys, and then obviously inflation, CPI number. Maybe you have what's on tap for us.
Yeah, this is going to be moving volatility this week. Of course, we got the CPI number coming on Wednesday. A lot of people are anticipating that. Maybe overlooked is going to be the ECB rate decision. Sometimes that can be a mover, so I'm not sleeping on that. They might have some surprises on how inflation is affecting their economy overseas.
Yeah, and just to get down to the volatility report, obviously a big week, CPI number, like we said, this Wednesday. So it's kind of interesting, the VIX futures curve. We saw the markets get a little shaky, and we saw a big volatility pop back, actually bigger than normal. The VIX went up about over 2 standard deviation move to the upside, and we saw this futures curve all tick up with that. Obviously, the VIX itself was now still trading above that front month VIX future. So, Joe, it makes me wonder if, the front month VIX future traders know something about this CPI. Maybe it comes in a little weaker than expected and then brings the VIX back down. But it's interesting that front month is now back below the VIX, whereas the second month still kind of trading higher than it. So,
yes,
maybe
this is unusual. Usually you see the front month above where that spot is, above where that is. And, this is something we've been tracking all year. After the Fed meeting, we talked about how it cracked that uptrend. The VIX cracked that uptrend, and we pointed out, now just because it cracked that uptrend does not mean the VIX is going to go to zero. May feel like that for a lot of traders, but it probably is going to be range bound, and that's kind of what we've seen lately. We've got the VIX, right now about 16, maybe on the higher end of that range. This is another thing we've been tracking every week now, Brian, is the S&P 500 25 Delta 3-month skew index. This is another way to think about volatility. How expensive are the puts versus the calls? This can be a contrarian indicator. When puts get too expensive, that could be a bottom for a market. When calls get too expensive, that could be a top for the market. This is something we've been following all year long. This FOMO really kicking off here in February. People were buying like the AI names. People were buying, chasing after that momentum. Those companies have kind of stalled out, done some really good consolidation, in my view, in the past month and a half. And then we've seen a broad rally catching up for the rest of the market since then.
Yeah, we've kind of been, we're kind of changed this over as really, we like this as a sort of a fear indicator or overbought market conditions. Basically, how are people positioning themselves with a hedge in a put option contract versus a call option contract on the S&P? And obviously right here, you saw that tick up. That kind of correlated with the VIX spike that we saw, because we saw hedgers coming in here and trying to buy that downside put and drive volatility higher. Maybe they got a little too over exuberant in that, Joe. Maybe the skew index is almost an indicator, like you said, when it gets too steep, it tends to be an indicator that the market's ready to rally because so many people have protection on the put downside in place here. And so maybe that protection got shoved into this marketplace and we can get a little relief rally off of that. but it's coming off a very low level. So this is kind of a wishy-washy situation. I don't know what your take is on that.
Yeah, I think I would have to agree. I want to avoid buying calls in this when this index is so cheap. I want to buy avoid buying puts when this index is so expensive here. So just kind of view it like that. Now that said, we're well off of our lows here, so maybe some range bound trading back and forth. I think that is prudent, but I do like the fact the market's been able to consolidate here. This hasn't been a contrarian indicator as of yet, and it might be good for the bulls to see this trade sideways for a while the market goes higher. We're talking about inflation this week. This is going to be something crucial for us to watch. There's another thing, of course, we've been watching, Brian, is the CPI year over year versus the 10-year notes. This is, everyone talks about it in 2022. This was everybody wanted to trade this. They were so worried about growth because the 10-year yield was so high. What are you seeing with this, and how are you trading this?
Well, I think it's interesting, right? Because when you really look at it going back, 20, 25 years, we really wanted to look at this like with more data than just last year. And when you take a look at it, the 10-year tends to trade at somewhat of a premium to where inflation is. Now, granted, inflation can have some volatility in it and spike one way or the other temporarily, but typically you see that premium in the 10-year note, and that premium has been put back into place. However, if inflation is going to remain in the three range, right? I think they're expecting about 3.7 year over year, right, with the CPI number. Then if the 10-year is supposed to be at a premium to that, I'd expect the 10-year to be in the upper fours, maybe even closer pushing to 5 if that situation is true. I mean, look back to the early 2000s when the 10-year was, got as high as 6%. That was a great do for people relative to inflation. And then it's interesting how once inflation kind of tamped down and came down, the 10-year sort of tracked with it. So it's pretty normal, the 10-year. I think, a lot of people say, are the Fed going to get it right or get it wrong? The 10-year at least has kind of gotten it right. Whether the Fed gets it right or not, that still, remains to be seen.
Yeah, the Fed's been there. The market's been really, really all over the place. So the market's been at 7 cuts to start the year. Now we're going to be saying 2 cuts. The Fed's been at 3 the whole time. So that's been interesting. But maybe at 3, we don't even need 3. Maybe that's still the wrong signal. And they should not be sending any signals that they're going to be easing because inflation, it does not quite look like it's going towards 2. And maybe that's fine for the next 6 months, for the next 12 months. Planning out, but really this is going to hurt us about 18 months to 2 years down the road. If inflation's stubbornly high, it's going to slow everything down.
Yeah, I mean, when you look at before, obviously inflation sat more in the 3 to 4 range. I know the Fed wants it to get it to 2, and if it's going to sit in the 3 to 4 range, then 1, maybe 2 rate cuts where the Fed funds rate is sitting at 4.75%, trading at a premium to where inflation is at, is probably more appropriate rather than seeing Fed cuts take rates down to 4.25 or 4%. If we're getting inflation in the high 3s, I don't think that's going to happen.
Well, there's appropriate, and then there's what the Fed's actually going to do. And there's one place in the market where the people are betting that the Fed's going to cut in spite of the fact that there is persistent inflation that's happening in metals. This was our trade last week, Brian. You nailed it on this call. Make sure to follow us every week. We have a trade actionable ideas every week. This was some portfolio protection. We were looking at GLD. It already cracked this trend line. People might have said, "Oh, you're late to the party on this trade," but the pattern was there. It was consistent. Our clients needed some protection. And Brian, talk us through our trade idea here.
Yeah, gold can kind of be considered a risk off. We obviously we bought a call spread in September. The theory was there is this breakout. If the Fed is going to cut rates and get to 2 rate cuts or even 3, that's probably a little bit too much, like I was just saying, for the market to handle. Now, we did see one Fed governor of Minnesota basically last week, and that's what kind of snowballed some volatility. Yes.
The Kashkari put came into play.
Yeah, the Kashkari came to try and crash out the market is what he tried to do, saying, maybe we don't even need any rate cuts. But the play here was if the Fed's going to cut, we think metals do very well. We're still holding this call spread here. I still like it. Our price target here on GLD would be somewhere around the 230 to 240 range. So we're not there yet. It's still rising. I think there's still some room to run. Maybe we get a little bit back and fill to that sort of breakout trend line that you saw on the last graphic here, but I'm still sticking with this trade.
Well, let's bring it on to our big story, and that's going to be Taiwan Semiconductor getting that big grant. They got $6 billion from the U.S. government. It's interesting. You're looking at the CHIPS Act. Intel got $18 billion. They're still kind of struggling, and the reason is Taiwan Semi makes better chips. They're making the chips that Nvidia is using, and it really we wanted to bring this up because we wanted to just talk about this ecosystem. We brought up that chart at the beginning of these three stocks together, but these three stocks are linked very much together. We're talking about ASML, TSM, and Nvidia. They all go together. Now ASML, they make the extreme ultraviolet lithography machines. I'm not really sure what that means, other than I know that they're the ones that can make these 2-nanometer chips, the most advanced chips that are going in these Nvidia AI chips. They have a monopoly on that. It is almost impossible to crack into this industry. I'm sure China is trying. I'm sure that people are getting into it, but the barrier to entry is just astronomical. And they have the only company that's making the machines. So they make the machines that make the machines. The producer that buys those machines is Taiwan Semi. They use those machines. They make the 2-nanometer chips used in Nvidia's AI chips, but they also make AMD chips. There's also a lot of other companies they make chips for. So they're, an interesting spot here, getting this huge grant from them. Be interesting to see. I also think they have more money coming, not only from U.S., but also from Japan in investing in them. And finally, Nvidia, this is the powerhouse. Everybody knows about that. They have the best chips. They have the best networking. They have the best software on that. People are going to compete with Nvidia and the AI chips. They're going to have to catch up on all three. Nvidia's got a head start there, so it seems reasonable that they're ahead. But it just seems to me that the better Nvidia does, the better that Taiwan Semi does, the better that ASML does. So all three are going together. It's really these chips that are powering the AI game is just really, really all tied in one.
Yeah, and I think if you're looking at this picture, here's like just, Econ 101, demand and supply, and what subsidies do, right? So if the government has come out and said, we're going to subsidize Taiwan Semiconductor to manufacture in the United States, make it affordable for them, obviously that gives some pricing power for Nvidia. It also puts a put to some degree on Taiwan Semiconductor as well, because that subsidy is there for them. And so there's ways to take advantage of it. As investors, if the government's going to subsidize something, let's find ways to sort of profit from that. And I think when we're looking at this trade, you can obviously see these three stocks have moved pretty well defined with each other, right? The ecosystem that Joe laid out, they are really tied to each other. Nvidia got a nice bump from its last earnings, and that's why you've seen the stock gap up higher. But I do expect these things sort of to trade in line. And I do have a trade for this, Joe. If we look a little bit at like what a chart of Taiwan Semiconductor looks like, this is really interesting here. Like, take a look at this. Over the last 2.5 years, we had sort of this huge selling pattern. I kind of highlighted it with the volume here, where traders were basically getting bearish about, TSM. It kind of hit this sideways mark in 2021, and then it topped out in 2022 and went downwards. And we had this huge amount of selling in volume wise. So I think the party is really just getting started, that we've recovered that whole head and shoulders bottom. We sort of hit a price target where it is right now, but we broke out and made new highs. And yes, volume increased, but not enough to offset of all the selling that was going on for 2.5 years. So we could have some serious upside, right, Joe?
Yeah, and I love the fact that we've been able to hang on to that price level that we highlighted here. I think this is a very big range here, from 255 all the way down to about 65. So the fact that we're above here, talking about $150 potential upside is not out of the realm of possibilities. Also, you just think about how much Nvidia has grown over the past 5 years. I think it's 1,700% over the past 5 years. If you back that out, Taiwan Semi is up. It's up a nice 290% over the past 5 years. I'm sure nobody's complaining about that, but it's certainly.
Joe, we lost you with the sound a little bit, but I'll just take over. And I think what you're going to say is basically, I think there's some catch up to be done for Taiwan Semiconductor.
Yes.
And
nobody's complaining about the 300% return over 5 years, but
yeah, I would be
percent is better. They could catch up.
Yeah. All right. So here I got a trade to trade this. Look, last week, full disclosure, we bought TSM for clients. We just bought the stock outright. So, certainly that's something that can be done. And we like it. We kind of added it towards that semiconductor portfolio where we're picking the most elite kind of names. And that was one of them. But if you don't want to outlay $140 something to buy this, we can use options to trade around it. And I think this makes for an interesting trade here. I'm going to keep it simple. Buying the September 140 call for $18. Now, that's a high implied volatility. It's a lot of premium. So there's some things to do and trade around that, right, Joe?
Yeah, absolutely. And if you follow me, you'll know that I did do a trade on Taiwan Semi last week too. I bought a SEP 140, 165 call spread. Here's what you can do with this implied volatility. If we do get an uptrend, like an uptick like today, we could perhaps sell an upside call spread, collect some of that premium back. I think that's what we'll be looking forward to doing next week if we do move upwards. Now, remember, this is a stock replacement where we own this call in the replace of the stock. We actually lose deltas. We have less exposure if the stock were to go lower. We can gain some of that premium back by selling a put if Taiwan Semi does go lower. So just gives us some directionality, some options, pardon the pun, to play this to the long side. We have less risk. We do have to trade it because there's a lot of implied vol here. So we have to act on it actively as it's moving around. We're expecting a lot of movement. The implied vol is a lot of movement. So we're hoping we get it straight to the upside. If that happens, that's great. We'll sell a call against it. If it does move against us, that's okay. Remember, we're losing less than owning the stock, and we're going to sell a put to buffer that cost.
Yes, exactly. So it's a tradable trade, right? We bought the stock for clients. That's a buy and hold longer term view. This call option is a tradable security that you want to work around, whether it's selling a downside put if the stock goes lower, or if the stock moves higher, sell a call, reduce sort of this premium cost. And that's kind of how we're playing it.
And that's going to be it for this week. I want to thank everybody for tuning in, everybody for watching. Don't forget, like, comment, subscribe. Check out the links in the description. Lots of content for you as always. Brian, you got anything else for this week?
Wear those solar glasses today if you're going to watch the eclipse. I know I will in about an hour here in Chicago. So it should be a lot of fun. But make sure you tune in every week. We're going to update this trade on Taiwan Semiconductor along with others every Monday, 1 p.m. Eastern. Tune in here. Thank you to Trade Your Hub and the sponsorship of the Miax for putting the show on. We'll see you next week.
All opinions expressed by Trade Your Hub contributors are solely the contributors' opinions and do not reflect the opinions of Trade Your nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Trade Your nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Trade Your Inc. is the parent company of Trade Your Brokerage Inc. Trade Your Brokerage Inc. and Trade Your Inc. are separate entities with their own products and services. Securities products and services are offered through Trade Your Brokerage Inc. Trade Your Brokerage Inc. is an independent subsidiary of Trade Your Inc., all rights reserved, member FINRA SIPC.